still we have to go with the parliamentary reputation that we are supposed to take it up. With this, I welcome all the dignitaries and members. I request the chairman to give his welcome address.
Good morning, everyone. I recognize the presence of Dr. Vishnu Bharat sir. I request Chandraprakash Jain to escort. Vishnu Bharat sir is president of APS institution, so he has helped us in getting this venue for us. Thank you so much, sir. Thank you, sir. Members, once again, good morning to everyone. It gives me immense pleasure to welcome you all to this intensive workshop on New Income Tax Act 2025. Is it New Income Tax Act 2025 or Income Tax Act 2025? On behalf of the Bengaluru branch of ICAI, I extend a warm welcome to all the distinguished chartered accountants, tax professionals and academicians and guests present here today. As we all know, the introduction of New Income Tax Act 2025 marks one of the most significant reforms in our country's fiscal framework in recent years. This new legislation aims to simplify compliance, enhance transparency, reduce litigation, and promote a more equitable tax system. However, as with any reform of such scale, it also brings with it a host of conceptual, procedural, and practical challenges that we, as professionals, must fully understand and adapt to. This workshop has been designed precisely for that purpose, to help us decode, discuss, and deliberate on the implications of the new Act. Over the course of sessions, we will explore key provisions, transitional issues, new compliance requirements, and strategic planning opportunities that arise under the new regime. For us chartered accountants, this change is not just a matter of compliance, it's a matter of professional responsibility and opportunity. Our clients, businesses, and society at large look to us for clarity, guidance, and confidence in navigating the new tax environment. Staying updated and well-informed is not merely an option, it is a professional necessity too. I take this opportunity to thank all of you for registering for today's session. Our learned speakers, we have host of speakers. I would like our Naveen Kariwal sir to explain all those things, and all of you for making it for today's important initiative by Bangalore branch. I'm confident that today's deliberations will enrich our understanding and prepare us to embrace the new law with clarity and confidence. Once again, I welcome you all for this workshop, and I wish all of us will have enriched knowledge on this new income tax in these 4 weeks full day program. Jai Hind, Jai ICI, Jai Karnataka. Thank you.
Thank you, Chairman. Now I request all the dignitaries, let's have a lighting of the lamp, and I request all the MC committee members to join us on the dais.
सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता
Then I have with me my good friend Dr. N. Suresh. We are traveling together frequently on our subjects. So recently we were in Hubli. So I had an opportunity to make a statement which I now take back with all seriousness. I made the statement in Hubli that in front of the CS that we have one of the finest speakers on the NGOs, on the charitable trust, which is now NGO in the New Income Tax Act. I take back that, sir, with due apologies. Not one of the finest, but the finest speaker on NGOs today under the New Income Tax Act 2025. Anyway, now coming to this keynote, I don't want to stand between him and you. I'll be back on December 6th on my topic, assessment procedures and, the income tax returns, which is 263 there in the new act. What is 139 has become 263 in the new act. Always you are of the impression 263 is revisionary powers. Now it is filing of return of income. So I'll be back on that day. Now what about the new income tax act, my dear friends? This exercise took only 6 months. It took 60,000 man hours, 150 officers of the department were involved, 60,000 man hours. It took 6 months. What was the brief given by the finance minister and honorable prime minister? He told that there are litigations galore, archaic language, redundant provisions. There are too many explanations, too many provisos, 1,200, 900. Delete all of them. 1,200 explanation, 900 provisos down the drain. Then they say archaic old language British law. Make it simpler. What was word notwithstanding goes out and comes the word irrespective. What is the brief given? Very simple, sir. Put all the sections in one place. For example, NGO sir would explain, you have 115 TD, 115 TE, elsewhere. You have 11, 12, 13, etc., etc. So you put all the sections. What is the brief given by the finance minister, which is achieved in a record shattering time of 6 months? Everything you put it in one place. Then they have given tables. It is like a ready reckoner. They are telling you want a formula, just calculate as per this formula. No question of litigation. For example, in the old act 9B was there, receipt of stock in trade by specified person from specified entity. So what was the formula? That formula is there. There are 40 formulae, my dear friends. We will go. This is the first intensive workshop under Manjunath Alur's leadership all over India. First intensive workshop all over India on the new income tax act, spanning over 4 Saturdays, 4 Wednesdays, more than 36 hours. He has got speakers across. And then you have even TG Suresh coming from Capital Gains, fantastic speaker from Chennai. Coming back to this last 2-3 minutes I would take and then, just close the keynote address because of the paucity of time. So 40 formulas are there, my dear friends. So when you take the formula, you cannot argue in front of the court. The court will tell this is the formula. And this is the, within the 4 corners of the formula, you have to calculate. So A is equal to B plus C minus D, example. So there you have to stick to that. Again, 5,12,000 words were there, reduced to 2,60,000 words. Act is shortened, but the sections have increased. Why? Earlier, there were not 298 sections, my dear friends, because you had lot of provisos, explanations. Then you had, provided that, further provided that, also provided that, then explanation 1, 2, 3, etc. So all that is gone now. So what comes in that place? In that place comes a fresh section. Only a fresh section will come with beautiful English, concise, precise, to the point. If you see the act, very well written. And I had an occasion to meet the Chief Commissioner of Chennai, 6 months back or 8 months back. He was telling I am under heavy tension. 1 month they have given me deductions. So I am rewriting the deductions, example. So, he explained how they want to make it more sympathy. Overall picture, if you see, there are not much changes here. Only the English has changed. And then all the sections, for example, relating to trust are in one place. Relating to exemptions are in one place. Now, definition section is as it is, sir, section 2. How many definitions now? In the new act, there are 112 definitions. 112 definitions. Everything is defined there. Nothing to worry. It goes in alphabetical order. So this is it. What is the first definition? Accountant. 2(1) is accountant. 212 will be zero coupon bond. Example. So this continues in the same old fashion. So I'll just take you to this 536 sections. Why it has increased? Because I told you, all the provisos explanation goes, and each proviso, each explanation, where there were, 130 provisos, it has now all gone. 90 provisos, all gone in section 10 in an exemption. Now become separate section and separate tables. TDS, fantastic there. 393, only tables you have. These are for residents, these are for non-residents. But then it says, under the tables, you meet these conditions. If you are coming in that conditions, you might as well deduct and pay and remit the TDS. For example, now, you take the 68, section 68, cash credit is now 102, 69, unexplained investment is 103, 69A is 104, 69B, amounts of investment not fully disclosed, 103, 104, 69C, unexplained expenditure is 105. What has happened? Main thing, you take this business for 28 to 44 dB. What was the earlier problem in the act? 44A. So how to insert? It is only 28 to 44 dB. So I want to insert, make a provision in the business, make some amendment. I am not able to do because it stops till 44. So what to do? 44A, 44A, 44AB, 44AD, 44ADA, 44AE, 44AF. You cannot stop. Go down further. 44B, 44BB, 44BBA, 44BBB. What to do? So continue. So now it is not like that. Each section, it's not, there is nothing called as 44B, BB now. So this is how. Now for example, tonnage tax, 115 VA, 115 VA, 30 sections are there, 29 sections. 115 VA, 115 VB, 115 VC, 115 VD, up to 115 VZ. Stop, 115 VZ, what to do? 115 VZA, 115 VZB, 115 VZC. So continues. Similarly, 115A, 115A, 115AB, 115AC, 115B. It goes on. 115 BAB, 115 BB, 115 BAC, 115. So the entire structure has changed like this. Similarly, you have this formula, you have the tables, you have the schedules. There are 16 schedules. Now if you see here, yeah. For example, your 116 to 138 income tax authorities, it is now in 236 to 258. Thereby it has increased. What was 139? Assessment procedure, it has become 263. Return of income, 263, 1A, 1B. Quoting of Aadhaar, 139 AA has become 262, subsection 9 now. There is still section, subsection. Major amendment, significant amendment. Section 3, previous year, assessment year, buried. What remains now is a tax year. No question of confusion. This act is now applicable with effect from 1st of April 26. Meaning to say what? That is a tax year. What about assessment year 26-27? That is financial year 25-26. Then the most important section before I close, 536, repeals and revisions. Don't worry. They say repeals and revision 536. Whatever has been initiated under the old Income Tax Act, any rectification notice, any 143.2, any 142.1, any special audit 142.2A, everything will continue to stay and you will have to pass the order under the old act only. Thank you very much for a very patient hearing.
Thank you. That was tremendously clear keynote address. We thank you for this. Before I ask Sri Raksha to introduce this first speaker, N. Suresh, I call upon C.A. Vishnu Bharat sir to speak few words.
Very good morning to all of you. Hearty welcome to all of you for APS. APS is the 90 years old institution. It used to cater from kindergarten to post-graduation. Now we have started preschool also. So kindly spread the message. We are excelled in our public school, cent% results from past 30 years, more of distinction than first class, more of first class than second class, and no failures till now. Engineering college also, we have excelled. We have in the Somnalli, there are two campuses. One, this is a city campus called Gnana Degula, and Somnalli campus is called Ananta Gnana Gangotri campus. that is 110 acres. So I'm so happy that my own fraternity is sitting in APS. I wish I would have made this auditorium bigger because I was told that already the registration had crossed 500 and almost it may reach up 600. So all the tax programs have been planned here. Any inconvenience, I'm here to take care. But probably from the next time onwards, you will have a better place for the lunch also because that was under construction. So my dear friends, I have vested interest to have the program here because it's for my convenience. And you have nice parking at my grounds, and you have a lunch place with shelter and this auditorium. And the only thing I have not made this as air conditioning because I don't want to give too much luxury to the students. So otherwise, this could have been possible. You know, we will think of that in the future. But I'm sure that this place is most convenient for all the people who are in Bangalore South because we used to commute to such a big distance and parking problem and this. Here, every problem is there. Not there. So I welcome once again and sorry for disturbing and coming in the way. Thank you very much.
Thank you, Vishnu Bharat sir, President APS. Thank you for providing this beautiful auditorium, and we are indebted to you for providing this auditorium at a very reasonable cost. Thank you, sir. Now I request CA Sri Raksha to come to the dais and please introduce our first speaker, CA N. Suresh.
Good morning, everyone. It's my honor and privilege to introduce today's speaker, CA Dr. N. Suresh. He's a graduate in commerce from Bangalore University and a fellow member of ICAI. He did his PhD on the subjects taxation system and practices in India, NGOs, NPOs, legal systems, and practices in India. He has authored several books and articles on varied topics relating to corporate laws and taxation. He is a prolific writer and an authoritative speaker. He has represented several papers and given lectures at seminars and conferences conducted by professional bodies, study circles, various branches of ICAI, Committee of Cooperative and NPO sectors. He has dealt with complex issues on trust matters. He actively participates in various public forums addressing various issues and has been a visiting faculty at the National Academy of Direct Taxes, Nagpur, and DRTI, Bangalore and Chennai. He's also a vocalist in Carnatic music and specializes in KP astrology. We welcome you, sir. Thank you.
Small corrections. I would request Manjunath sir to please hand over the memento to the Vishnu Bharat sir. Round of applause, members. Thank you, sir. Thank you. Suresh, sir, you can step.
Good morning to all of you. Ladies and gentlemen, it gives me an immense pleasure to discuss on the taxation of NPOs under the Income Tax Act 2025. At the outset, I thank the Honorable Chairman of the Bangalore branch of SARC and other committee members for having called upon me to take up this assignment. I thank them. I thank all of you for having come all the way. You know, the Income Tax Act 1961 prior to 1922 Act relating to the exemptions of charitable trust, they have consistently used the expression charitable or religious trust or institutions. The first time in the history you will see the expression non-profit organization has been brought in the statute. In the repealed act, it was referred to as a charitable trust or institutions, now called as non-profit organization. I think our learned friend has said something on the brief overview of the Income Tax Act 2025. But before I go to that, why they have used the word non-profit organization? Why there is change in the thinking by the government? If you go back to the history, there are three sectors, the government being the first sector, private being the second sector, third being social sector. The social sector exists not for profit. Their intention is to do service to the society at large. They do something what government ought to be done. Therefore, sometimes called as non-governmental organization. They exist not for profit, therefore they are called non-profit organization. Likewise, they come up voluntarily, sometimes referred as a voluntary organization, and they act independently, called independent sector. These are the different names. If you go to the advanced countries, the expression social sector, social audit is the most commonly used expression. And the social sector gaining momentum, the amount deployed for the social cause runs into several trillions, and an average estimated amount that would be spent on in India is no less than the 10 trillions. So now only two monitoring agencies that you have to oversee how they are spending. Firstly, the Ministry of the Finance through the Income Tax Department. Second, you have the Ministry of the Home Affairs. All the foreign contributions are monitored by them. Now let's come to the Income Tax Act 2025, which repealed the 1961 Act. Where are we today? Are we better off or we are worse off? If you look at, there are some critics who criticized on various aspects. But when I looked at the provisions relating to the non-profit organizations, I found they have brought in a very simple manner, concise manner, and they have brought it in a capsule form at one place, dedicated place. Earlier definition in 215, section 11, 12, 3, 13. On 13 you have a wide violations. Again they have brought the violations in 12AB. Again for 158 BBC you have to go for anonymous donations. It has spread over. For taxation you have to go to section 164, 2 and all that. Now all that has been simplified, and the language, as our learned friend said, lucid language, simple language they have brought in. And earlier if you go to this 1023C, you get confused every time when you read. There are classes and subclasses. Subclasses runs to 24 classes. And they refer to the subclass 21. What is 21? You have to put your finger and count literally. If you miss it, again you have to go back and miss. There were a lot of confusion. And the way that they have brought in, though many people said there's no value additions and all that, the biggest value addition is simple and concise manner, bringing the language as it could be understood by a common man. As a result, it reduces, mitigates the litigations to a greater extent, very precise definitions. And wherever they have to define, they have brought it very clearly. So with this, I think the way they have brought in, I have some appreciation that well done work has been done by the ministry. And concepts have been defined properly. There is no ambiguity in understanding the concepts. Say for example, in the Repealed Act, Section 11 talks about income derived from the property held under trust. What is it? Nobody knows. Act never defined what is income derived from the Property Act. To understand that, you have to go back to the Indian Trust Act 1882 to understand what is trust and how the income derived from the property held under trust gets into. Likewise, if you go to section 11.4, the property held under trust, what is the meaning of property held under trust? When it applies? There was not much of the clarity. Even to understand the concept principles of charity, though it looks to be silly, but went to the Supreme Court to define what is charity is. The altruism is the first concept brought by the Supreme Court. So I think the Income Tax Act 2025, I think they have done great work in bringing most simplified manner, keeping the common man into account so that litigation can be reduced. Now let me come back to the subject proper. I will give you the overview of the provisions relating to non-profit organization. More or less all the provisions as contained in the Repealed Act has been brought in, but under the different provisions under different sections. Starts from 332 and ends up with 355. So everything has been brought over there in a simplified manner. So let me not repeat again on this. Let's go to the subject. Now there is a definition of charitable purpose. It's an inclusive definition. Nothing much has been done in this regard here. They borrowed what it was contained in the Repealed Act. Same thing has been brought under a different section called Section 223. Charitable purpose includes relief of the poor, education, medical relief, preservation of environment and forest, preservation of monument. Then the residuary clause is called advancement of object of general public utility. So what it was contained in 1961 Act, similar has been brought over there. Then you have a conditions for registration. This is the most important. Even the Repealed Act, Section 12A1 was dealing with the conditions, because there are certain conditions has been added year after year. Those conditions called a primary conditions, that is the mandatory conditions. If you do not comply with the mandatory conditions, then you will not be entitled for any exemptions. Similarly, that they have brought mandatory conditions here also. One of the primary requirement of mandatory condition is that person is, in order to claim an exemption here, the benefit of tax relief, you have to be constituted, registered or incorporated in India. And you must comply with the requirement of the definition of charitable purpose or the religious. This is the first condition. And secondly, you must have a general public character. Any trust or institutions entitled for registration under section earlier Act 12AB or ATG, your trust or institution must have character of public. So what is the meaning of public? It says general public. Now the condition says benefit of the general public. So what is the meaning of general public? You mean to say every person in the country should derive the benefit of your trust? Or your non-profit organization to get the benefit of exemption? What is the meaning of general public? The general public, in the common parlance, means when the benefits goes to the large section of the society, then it is called general public. In fact, a case came up before the Supreme Court in Ahmedabad Rana Trust case reported in 81 ITR, where the issue was whether cross-section of the society from the wide spectrum of the society, if the benefit goes, still can we call this as a general public? Supreme Court said, yes, cross-section from the wide spectrum of the society, if they get the benefit, then it amounts to a public. Issue came up, Jodhpur Chartered Accountants Association, where they filed registration, then Act 12A. It was flatly refused on the ground. You are a small section of the numbers, therefore it is not a public. This was challenged before the High Court. Then the High Court said, they are representing small sections from the wide spectrum of the society. Therefore, when the object is for the benefit of the public at large, then they are entitled for an exemptions. They are entitled for 12A registration also. Then you have another condition what they brought in, wholly for charitable or religious purposes in India. What is the position when I have charitable and religious? If you look back to section Repealed Act, section 11(1)A, section 11(1)B, section 11(1)C was dealing with that. Partly held for charitable purposes were also entitled for claiming exemptions. But in the new act, they have expressed wholly for charitable or religious purpose. But what happens when I have array of combination of both the objects? Is that I'm failing for the conditions under section 332(2)? Is a matter of debate. And they have given in the subsequent laws those which constituted partly prior to 1961 Act, before the commencement of the 1961 Act, that benefit has been given. Because in many cases, even the Supreme Court has also had, in the case of Dawudi Ibrahim case, when you have an object of both charitable and religious, you are entitled to claim an exemptions, 12A will apply. Take example, you are a religious trust. Are you not entitled for 12A? Yes, you are entitled for 12A registration. You are entitled for 12AB registration. Similarly here. When you are a charitable institution, you are entitled for 12A registration or 12AB registration. When you come together, what is the problem? See, when you have a charity object, when you have religious objects, when you come together, combining these two, what prevents to give you an exemptions? Tax exemptions. No doubt, ATG will not apply because they have got a certain specific classes. Whether if you spend more than 5% on the religious, you are not entitled for an exemptions. But otherwise, exemptions under section 12A, 12AB, which was conferred earlier, should have been covered here. Next is applications. Once you satisfy the basic requirement, then comes who should apply for registration. Section 332(1) provides for this. The registration can be sought by a public trust, a society, Section 8 company, or a university established or any other institution affiliated thereto recognized by the government, then the institution financed wholly by the government or local authority. Then any persons as referred to in Schedule 3 and 7 of this new act, you can go for a registration. And they brought a residue saying that any other persons notified the board in this behalf. The prominent changes made here is, there was a privileged class of institutions. When government finances, wholly or partly, those institutions were not obliged to go for a registration process. They were blanket exempted from the tax. In 2023 and 24 law was changed, where the specified approval to be sought, if it is not by the, wholly by the government, financed by partly or wholly by the government, they should come under the normal class of seeking a registration under section 12AB. They have to file an application under section 12A1 AC of the Repeal Act. Now they have made it, not all the institutions, though it is wholly financed or partly financed by the government, also should seek a registration. But their income is fully exempted under section Schedule 7. Then the time limit. The time limit is sequel to what we have today. They brought categorically what is the time limit in which the application has to be disposed of or the application to be made to the, for seeking the registration. What we had in the Repealed Act, similarly they have brought in. Not much of the changes. And also they have recognized those while seeking the registration, if the gross income far exceeds the 5 crores, one of the 2 years in which they make an application, then the tenure of the validity is for 5 years. If it is less than 5 crores, then the tenure of validity goes for 10 years. Same thing has been recognized over here. Then condition of delay, you know. In 2007, the power vested with the Commissioner of Income Tax to condone the delay has been stripped off. As a result, any delay in filing an application for seeking the registration, it was a fatal. There was a lot of hue and cry. In fact, in 2024, when the CBDT member has come, when the principal CIT has come, this issue was raised. Because for some reasons, there may be delay in filing an application. Just because that there is a delay in filing an application, you can't cancel the registration and invoke 115 TD, that accreted tax on that. So a lot of issues were before the CBDT member. Thanks to that, law was amended by the 2024 repealed act, the provision of condonation has been brought in. In case there is any delay in filing an application, on case-to-case basis, you can argue before the commissioner and get this condoned. Similarly, here in 332(4), when there is a delay in filing an application, power is vested with the principal CIT or the CIT to condone the delay. If delay is not condoned, tax arises, then accreted tax of provision will apply here. This is the consequences of that. Now, power of the CIT. Now, the power of the Commissioner of Income Tax and Commissioner of Income Tax in the repealed act was contained in section 12AB. Earlier, prior to that, it was in section 12AA, then migrated into 12AB. The basic philosophy of bringing the power is the Commissioner of Income Tax should satisfy whether the trust or the non-profit organization carries genuine activities. What is genuine activity? Not defined. Then how do you arrive the conclusion that the non-profit organization is running a genuine activities? What does it mean? Simple. When they say genuine activities, it means the activity per se you carry what has been transpired or recited in the objects of the trust. You have an object. In pursuant to the object, if you carry an activity, it's called genuine activities. New startup institutions, so what happens? Because in the provisions of the Income Tax Act does not stop you from making an application. As long as that you are trust or society, you can make an application. When the object goes to the public at large, then you can make an application. When you make an application, they have to bound to dispose the application, but you have not carried the activities. When you have not carried the activities, how the commissioner will come to the conclusion whether you have carried the genuine activities or not? Invariably, department is always contest if you have not carried out the activities. They state the commissioner has unable to satisfy whether you carried the genuine activity. They used to refuse to grant the registration. Then after provisional registration they have brought in. The provisional registration you need not carry any activity at all. If you are in existence over the years, then it is incumbent you have to carry an activity. To understand what is an activity, whether proposed activity also to be considered for this purpose? Question came up before the Supreme Court in Anand Social Institutions, where they said, if you have a proposal and based on the proposal you are contemplated to take these activities in the future, that should be considered at the time of considering the genuine activities. So similar issue may come up with regard to the power of the Commissioner of Income Tax in the 1925 Act also. Secondly, that there is a condition that compliance of such requirement of any other law, such a broad and wide expression they have brought in. Any other law. How many laws we have to comply with? Can anyone number that? To the best judgment of the retired Chief Justice of the Supreme Court narrated, he knows about 768 laws in the country, to his bare memory. If this is the 768 laws, which law that you have to comply? Because they have not categorically said which of the laws. Suppose I am a society, should I comply with the society's law? If I am a Section 8 company, should I comply with the Companies Act 2013? If I am a trust, Should I comply with the respective state act? Which law? This is the wide powers given to the commissioner. And sometimes, very loosely somebody was telling, even if you commit traffic violation could resort to this. How shameful to use this word. Can they take sweep powers to deny an exemption on this pretext? The whole intention, because the law was changed in 2019. In the repealed act, they have brought it in section 12AB, saying that they wanted all the trusted institutions or non-profit organizations to comply the other laws. That is, you have to segregate fundamental law and auxiliary laws. Their intention was to bring the fundamental law. You should be complied with all the requirements of the law. For example, that you are a society, you have to comply with all the requirements of the Societies Act. If you do not comply with the Societies Act, if the action has been taken by the regulators to cancel your registration, then it goes to the root of your institution when you have not appealed, when you have not filed a writ in the court, then that becomes the final. As a result, power is vested with the commissioner to cancel the registration or refuse to grant the registration. That fundamental law has to be. Enactment which applies to the institution should be considered. Now commonly that you will come across, building safety, fire safety, human safety, all the safeties that they are bringing, whether have you complied with the requirement of this clause? Of course, in one way it is good that they are asking building safety, and especially the schools and the hospital. This is so important. Only when the commissioner asks this question, our management will really, we will get it done. They would have ignored. So therefore, in that respect, we should be thankful to the commissioner. At least they are raising this point, so that alert call goes to them in the interest of the children, in the interest of the patients. Compliance is being done. But only thing is, I wished they should have brought, in case of society, what they have to do, in case of Section 8 company, what they have to do, instead of giving a wide power. If you carefully look at specified violations in the repealed act, they said, if the complaints of any other law not followed, as a result, it has reached the final, where it has not been appealed, then when it goes to the achievement of the objects, then only this clause should be invoked. Therefore, in a nutshell, the fundamental law which disturbs for you to achieve the object, only those to be considered for this purpose. So, in the recent time, question, opinion was sought. If you are also registered under the Foreign Contribution Regulation Act, if the registration has been cancelled by the Foreign Contribution Regulation Act, then what happens? Commissioner invokes this. They have a list of all the under the FCRA Act 2010 cancelled institutions, because now they have all the data in one place. Just because the registration has been cancelled, where you have not appealed, or you appealed but not successful, then registration can be cancelled. The moment registration is cancelled, accredited tax will apply. Then I put the argument with them. If I am not getting the FCRA being cancelled, I have a local funds. Still I can run. You can't stop me from running this institution just because I don't have a FCRA registration. That's separate. This is the new trend starting now. if at all we go for challenge before the tribunal, they would restore it back. Because local funds you can always deploy for charitable purposes, if not foreign contributions. Then they have brought provisional registrations, condonation delays and all this. And they have provided the table in section 332, which specifies us the time frame which the order has to be placed. This is equal to one that we had in the Repeal Act also. Tax on income of registered non-profit organization. This is the one where they brought wonderfully drafted. When the tax will arise, when the regular tax will arise, when the specified tax will arise. Because in the Repealed Act, there was terrible confusion. Suppose there is a violations, because the violation has been brought broadly in section 13. Section 13, 1A to section 13, 1D is the first section, first sub, then 13.2A to 13.2H is the second sub. So when there is a violations of any one of them, if you go back to section 12, it says, section 11 and 12 will not apply the title of the provision. So as long as section 13 applies, section 11, 12 will not apply. Thanks to the various, the courts which held that only to the extent of violation you should tax them, but you can't deny any exemptions in toto. So now they have considered very well in the 2025 Act. They say there are two types of income called the regular income and specified income. The regular income is defined in section 335. It says income from any charitable or religious activity. That is called, falls under the regular income. Then income from any property deposit or investment. You make any FD, you earn interest out of that. It is a regular income. Then income derived from any property deposit investment held in part. It is called regular income. Voluntary contribution is a regular income. Gains of any commercial permissible activity 344, 345, 346 comes under the purview of regular income. Then this constitutes regular income. To the best of thinking, these are the categories which falls under the regular income. Now they have turned to define what is specified income. In section 337 deals with specified income. It says anonymous donation is a specified income. Income applied directly or indirectly for the benefit of any related person computed in the manner as prescribed. They have not prescribed, but they will prescribe how to compute the income. Is a specified income. Any portion of income applied outside India, because any institutions, non-profit organization under this act should carry activities in India. You should incorporate in India. You should carry an activity in India. This is the preconditions. If you spend the money outside India or apply the income outside India, then to the extent you apply outside India, treat it as specified income. Investment or deposit made contravention of section 350. 350 is nothing but specified mode in the Repeal Act section 11.5, read with section 13.1d. If there is a violation, that is called as a specified income. Then deemed corpus donation, where conditions specified 340 is violated. Section 340 is different. There are two sections that deals with corpus donation, 339 and 340. In 340, it is a deemed corpus donation because it is notified by the government. As a result, temple, mosque, church, etc., board is empowered to treat how much can be treated as corpus donation, how much can be treated as voluntary contribution. So if there is any violation to that, then it is treated as specified income. Then any portion of accumulated income applied for a purpose other than charitable religious purposes for which it is accumulated, then it is called specified income. Then comes any portion of accumulated income if it is ceases to be accumulated. Because you have to, one of the conditions is you have to hold this in an investment mode. If you do not hold this money, then automatically it ceases to be accumulated. It will be brought to tax under the specified income. Then any portion of accumulated, if it is not applied as per the provision of section 341 to 4, that is application, what are the applications if there is a failure to do that, called as specified income. Then any portion of accumulated income, if it is credited or paid to any other non-registered non-profit organization. So earlier section 11(1)(a) proviso was saying, when you accumulate the income, from the accumulated income, you cannot give away as a donation to any charitable or organization. Likewise, the non-profit organization, when you accumulate the income, you cannot use this accumulated income by giving away as voluntary contribution to non-profit organization. If so, then it is called specified income. Any income applied to purpose other than charitable religious purpose. That means if you apply an income but not for the purpose what you have set in the deed of trust or in instrument in writing, then it is called specified income. Then any income determined by the AO under section 344 in excess of the income shown in the books of account of such business undertaking. Section 11(4) gives a wide power for the trust or institution. When the property is held under trust, then when the property is held under trust, it includes a business undertaking. Suppose when I am constituting a trust, if I bring the business into the trust, then we are entitled for an exemption in section 11(4), subject to condition. Power is vested with the AO to determine how much profit is attributable to charity, how much profit attributable to the business. And that business, suppose you have determined 10 lakhs, but the AO determines it is 25 lakhs, then difference of 15 lakhs will be brought as a specified income here. Then what is the difference between tax on the regular income, tax on the specified income? Tax on the specified income is taxed at 30%. Whereas tax on the regular income, you go with as it would applicable to any individuals. This is how tax will be determined. There is a slab for exemption, it will be allowed. The next slab, what is the rate of taxes? It will be applied. Whereas in case of the specified income, it will be taxed at percentage on the income. Then we will move on to the determination of tax on the regular income. How do you determine the tax on the regular income? If you go back to the Repealed Act, section 11(1)(a) was the governing provisions. Section 11(1)(a) states, the income derived from the property held under trust, if it is applied wholly for charitable religious purposes, to the extent of 85%, you are exempt, and you are allowed to set apart, not exceeding 15% of the income. So 85% is the minimum benchmark that you have to apply. If your application of income is less than 85%, say 70%, then there is a gap of 15%. For that 15%, you have two choices. Either you can accumulate the income or pay the taxes on that. Similarly here, the tax, determining tax on regular income, up to 85% if you spend money, then determination of tax is nil. If it is less than 85%, if it is not accumulated under section 342 or complying of section 341, it will be brought to tax. Then determination of tax on specified income, section 337 and 334 deals with it. Here it says that specified income of registered non-proprietary shall be taxed in the year as provided in table 337. There is a list in 337 you have what it constitutes the specified income. You have a dozen items over there. On that, the tax year, in which tax year this will be brought to tax, they are specified on that. Then we have a provision of section 338, which says that the income not to be included in regular income. That means those income applied outside India, constituted prior to 1952, or after 1952 for the purposes of international welfare in which India is interested, then that will not be included in the regular income. This is nothing but section 11(1)(c) of the repealed act. For this purpose, suppose your non-profit organization wants to engage for international welfare. Suppose two countries, they agree together. Then in such circumstances, you have to seek the approval from the board, Central Board of Direct Taxes. In specific, they provide you by making an order, yes, this is for the international welfare. You can apply the income outside India. You may earn the income in India, but you are permitted to spend outside India. Such application in the normal circumstances will be treated as a specific income. But now, if you seek the approval from the CBDT, then it will not be considered as a regular income. Then you have the corpus donation. The corpus donation, if you go back to the repealed Act of 1961, there is a definition of income in section 224 II. At one point of time, any voluntary contribution was never treated as an income. Then in 1973, the voluntary contribution, other than the specific direction, was treated as an income and brought in section 12 of the IT Act. In 1987, the Taxation Amendment Act of 1987, which came into force from 1/4/89, they have made a change. Any voluntary contribution in the first place to be treated as income. When they talked about voluntary contribution, even corpus donation have the character of voluntary contribution, therefore to be treated as an income in the first place. Then they provided a specific clause, section 11(1)(d). If there is a specific direction to hold it towards the corpus, then you can claim an exemption under section 11(1)(d). Similarly, in this act, they brought the definition of corpus donation. Corpus donation means when you receive a voluntary contribution with a specific direction to hold it towards the corpus, it is called corpus donation. And this corpus donation is completely exempt. So, one of the basic requirement or the condition is that there should be a direction to hold it towards the corpus. Now, to hold this, to provide an evidence, who should give an evidence? Suppose you are the recipient trustee, if you give a receipt saying that this is towards the corpus, signed by the secretary or the board of trustees, is it enough to prove that this is a direction from them? Or whether you have to obtain a letter from the donor saying that this is hold it towards the corpus to you. That was always a controversy with that. In some cases, they have not received any directions, but treated as a corpus donation. Then what happens? Very interestingly, in the 1961 Act, there was a wonderful judgment from the Karnataka High Court in Sri Ramakrishna Sevashrama Trust case. Very wonderful landmark judgment. There this Ramakrishna Sevashrama took a pilot providing a drinking water facilities in Anandpur district. Because in Anandpur district, people were suffering for want of water. So this trust took a pilot project to provide drinking facilities to the people of Anandpur district. So this trust has created 2 bank accounts, one for the money which comes to the directly to the drinking water purposes. Other is the general bank account. So when they filed the return of income, they found, department found, there is a, in the liability side of the balance sheet, drinking water facility project was shown, huge amount was shown, not treated as an income. Because of that, the additional commissioner who was monitoring the case took up this and said, what is this amount? They said it is a corpus. It's a specific fund, corpus fund, therefore, this is treated as a corpus. Then he asked, where is the evidence? There is a direction from the donor. They said, we don't have any direction. We got the money, we have directly gone into the bank account. We don't have any further. On the pretext of this, he has levied the taxes, treated as a voluntary contribution, exemptions was not given, but to tax them. This was challenged in the tribunal, finally went to the High Court, Karnataka High Court. So in the Karnataka High Court, what did it was, the sitting judge asked the department, you are harping that evidence to be given as a corpus donation. Show me under the act where it is said that written document has to be produced before you. Then department had got into trouble because it is never transcribed in section 11(1)(d). It says there is a direction to hold it towards corpus. Whether it is in writing or oral was not mentioned. Then it was narrated in India, the history goes back, trust constituting orally has been prevalence all over the country, right from the 10th century. Therefore, when somebody gives us a oral instruction to hold it towards corpus, it was suffice. In such a circumstances, you must study the conduct of the accounts. What have they done? In this case, what have they done? They have put the money into the specific drinking water facility and they are using this only for this particular purpose. Should it not constitute as a corpus? Should it not constitute as a specific fund? Have they diverted the fund? Department said no. Then he said, this to be treated as a corpus, exemption has to be provided. At least he should have stopped there, judge. Then he made a further comment saying that you made the people to suffer for last 8 years and he is levied a penalty on the commissioner to pay out of his income 1 lakh of rupees. That's a kind of gut that church worked on that. So now here also there is a silent on that. There should be a directions. See, if you go back to the in our country, oral, if you go to the temples, it is a 10th century temple, 11th century temple. What kind of documents that you will find? There is a famous judgment in the Karnataka tribunal, not been appealed before the High Court, is C. Vyasaraj case. In the C. Vyasaraj case, the issue came up because a public petition was filed in 1996 because the pundits of this pontiff was misusing the funds. case was filed. In 2011, Karnataka High Court said, ask the state government to take over the administration of the BUT. And Mr. Jairaj was the secretary, chief secretary of the Karnataka state, was appointed as administrator of the BUT. Then they constituted the committee by virtue of the High Court. Chief Justice of the Supreme Court, Venkatachalaya, and Justice Vasudev Murthy, they were all constituted as a committee. When they looked at the records, they found they don't have 12-year registration at all. Then they got into worry. They went to the Commissioner of Income Tax, filed an application seeking the registration. Then the Commissioner said, produce the trust deed. They said, this is a case relating to 1395, C. Vyasraja was there. And he was the minister birth in the Krishna Deva Raya regime. And it is the Vyasdita who gave a Diksha to Saint Purandaradasa. He who gave Diksha to Saint Kanakadasa. But Income Tax Commissioner did not understand. He said, where is the trust deed? Trust deed was not at all prevalent that time. Just because they did not have the trust deed, he refused to grant the registration under Section 28 and slapped them the taxes. So then the matter came up, how to get resolved this issue. Because again, next commissioner will come, same thing, rhetoric will start. Should we constitute another trust or should we challenge this? In the meantime, the luminaries constituted. They said, let us have another trust so that we will align all these things in our new trust. Then we have a deed in instrument writing. We can get the exemptions and all that. At that point of time, Mr. Jairaj and Venkatachalaya asked me, we need your opinion. Will you come back to us here? Then I went, it's in Baswangudi. They asked me, we all given a thinking to constitute another trust. What is your opinion? Then I said, no, you can't do this. You have no right to do a new trust. I said, you cannot alienate the properties of C. Vyasraja, which was in 1395. You can't do this. When I said, they all become very upset. And Jairaj said, I was the chief secretary. How can you dare to tell me that I don't have a right to do that? I said, this is the position of law, Maestro. Then we left. Then next day some wisdom was prevailed. They asked me to come to Venkatachalaya's house. I went there. They asked me. Probably Venkatachalaya must have said, there is some sense in his talk, let us hear him properly. Then I asked them, what is the problem that you have? No, because Commissioner is persistently insisting, trust, we don't have a trust deed. Therefore, we are prevented to claim an exemption. Then I said, there's no need for a trust deed. The moment I said there's no need, then he said, you handle this case. Finally, we went to the tribunal. So in the tribunal, 2-3 hearings has happened. One of the issue which I have emphasized before the Lordship was, there is no need for a deed of trust to be in writing in this country. And all activities I given, all that, he was very happy. Then legal judge, he asked me, you show me under the provisions of the Act, how in the absence of the trust deed, we can grant the registration. Then I said, there's no difficulty. I asked the judge to read section 12A1 of the Income Tax Act. Repeat. There they have used the word created or established. 40 minutes I gave my presentation. Why the word created was used, why the word established was used. Because both are not synonymous. There is a definite proper meaning assigned to this. I said in India, from the 9th century we have a prevalent of oral trust. Many temples have been created. So, when an instrument in writing, it is called established, like Section 8 company, like a society, When the trust deed you have, it is called established. In the absence of instrument in writing, it is trapped as created. You have to be satisfied with the activities. Here are my activities, here are my bank account. Therefore, I satisfy the requirement of 12A, I am entitled for an exemption. Thanks to the justice, wisdom was prevailed. They granted the registration, directed the commissioner to grant the registration within 30 days. Nowadays you don't find 30 days and all that. They say simply they keep quiet. Because they keep quiet, there's no binding rule for the commissioner when he has to issue the notice also. At that time they used to make it, grant the registration in 30 days. So therefore, considering that, the oral practice, the customary practice in India, you cannot even go by. Our fundamental root is prevailed upon that. Likewise, the Karnataka High Court judgment, if not, corpus donation is not in writing, the conduct of the accounts can speak to itself. And this C. Vyasaraja Math judgment was used more than 48,000 temples in the country, including Krishna Math of the Udupi. Because it was, Madhvacharya was in the 10th century. Where do you find the written document of trust deed? So therefore, the customary practice also we should keep in mind while making an interpretation, and evidence can be done on that. So now we come back to the application of income. So I got a warning to break for the tea. Okay? Let me honor this. Let's break it for tea.
Dear members, tea is arranged in the ground floor. Let's take a short 15 minutes break and let's be back after 15 minutes by 12 o'clock. Thank you.
So now let's move on to the next slide on the application of income. The erstwhile Repeal Act 1961, Section 11(1)A corresponds to this 341. So what is the meaning of application of income? The Act says application of income. Whether application is sequel to spent or sequel to expenditure, what it is. The expression application refers to the outgoing of the trust or institution or a non-profit organization. This expression application used in the broadest sense and in its widest amplitude. It comprises of both revenue expenditure as well as a capital expenditure. When the revenue or capital, as long as it's for the objects of the trust, it is considered as an application. The applications also sometimes, deemed application also considered as an application. And amounts set aside not exceeding 15% also considered as an application. One of the ingrained of providing an exemptions for non-profit organization is that the application made is for the objects of the trust. either wholly for charitable or religious purposes. In fact, if you look back to section 11(1)(a) of the Income Tax Act, Repealed Act, they have used the expression income derived from the property held under trust applied wholly for charitable or religious purposes in India. When they have used the word wholly for charitable or religious purposes, does it mean that your application exclusively for charitable or exclusively for religious? Suppose you spend the money for charitable as well the religious, because you have contained in the earlier deed of trust both the objects together. Will you be satisfying the test of the earlier repealed Act 11(1)(a) and under 341 of the 2025 Act? So issue came up because the department always canvasses saying that either you should spend the money wholly for charitable or religious purposes. If it is a combination of both, then they say you are not entitled for an exemption. So in that context, when I was addressing the Training Institute of the CBDT, the National Academy of in Nagpur, most of the additional commissioner and commissioner level who had come posed me this question: in what context and the sense in which wholly for charitable or religious has been brought in section 11(1)(a)? Then I deliberated, saying the expression wholly for charitable or religious has been used in conjunctive sense. That means either you can read charitable or religious, or you can read charitable and oblique or religious. The substantive part is the objects which are contained in the deed of trust. When the registration has been granted based on the objects enshrined in the deed of trust, if you apply the income, whether it is a combination of charitable religious, entitled for an exemption. Why they have used the word or instead of and? Had they have used the word charitable and religious, then what would have happened? The consequences could be, the department DAO will always ask, did you spend money for charitable and religious? If you say only charitable, then you're disqualified. Or if you spend only for religious, not charitable, you will disqualify. Therefore, in the conjunctive sense that they have brought in, expression wholly for charitable or religious, but it should be read in a conjunctive sense. Otherwise, it won't give the meaning. It leads to absurdity. When you have the substance of the objects which are enshrined in the deed of trust, combination of both charitable and religious, you are entitled to spend the money for both. In fact, prior to 2004, the Commissioner of Income Tax used to give in the registration certificate 12AA, charitable and religious also, either charitable or religious separate, charitable and religious also. That was prevalence. So when you have these objects together, wholly for charitable or religious to be read in the conjunctive sense. Then, in 2022, law was amended. Any donation given by a trust or institutions or a non-profit organization to the other non-profit organization, 85% will be allowed as a deductions, treated as an application. When this law was brought in, there was a hue and cry. Most of them were attributing that ministry has deprived the benefit of non-profit organization. Is it true? There was a hue and cry. Why only 85% to be given when I pay 1 lakh? Why only 85,000 to be treated as an expense? But why not 1 lakh? Logic is simple. When a non-profit organization gets the money, on a blanket, 15% deductions are allowed, set aside. Only 85% you are supposed to spend. That 85%, you have already enriched 15% of benefit of exemption there. So if I allow again 1 lakh on the payment, you are enriching 115% against 100% that can be allowed. Therefore, the law was amended in the correct perspective that they have brought in, 85% to be allowed, even in section 341. When there is a voluntary contribution from non-profit organization to other non-profit organization, 85% will be allowed. Then, in case of corpus donation, law was amended 2019, again substituted 21 and 22. If the corpus donation is used for the purposes of charitable purposes or religious purposes, then to the extent that you have used this money from the application, this will be subtracted. The law brought in 2022 was, any corpus donation received should be remained intact as a corpus donation, and you should substantiate and prove to the assessing officer, here is a corpus donation, this is an investment mode I made. If the investment what you made is less than what you received, then to the extent there is a depletion, will be subtracted from your expense. Subject to condition, when you put back this money again in the investment mode, to that extent, you will be allowed as an application. Further condition, within 5 years that you have to put this money back. And the other condition is, when you use this money, there should be no violation of TDS or expenses in the form of cash far exceeding 10,000 rupees. If there is a violation, then you will not get the benefit of claiming an exemption on that. Similarly, that they have brought in section 341. To claim as an application, you have to put back the money. Similarly, in case of loan borrowed and applied, at one point of time, when you borrow money and acquire the asset, on the acquisition of the asset were allowed as application. When you repay the debt, were treated as an application. Therefore, if you borrow 100 rupees and acquire 100 rupees asset, on acquisition of asset 100 allowed as an application, repayment of 100 were also allowed as an application. You are enriching 200 rupees against 100 rupees. Then the law was amended. But prior to the amendment, a case went up to the Karnataka High Court in Janmabhoomi Trust case. In the Janmabhoomi Trust case, the department contested. It amounts to a dual deductions, because against 100 you are claiming 200 is not contemplated in the law, therefore should not be allowed. Then in the course of the hearing, the matter came up. The judge said all the outgoings of the charitable institutions should be allowed as an application, because there is a circular. Therefore, when they acquire the asset, there is an outflowing. When the repayment of that is also outflowing. Therefore, both should be allowed. Then department said, if that is the case, when they take the loan, that to be treated as an income, so that it neutralizes. Then the court said, how can you conceive an idea that loan is an income? Impossible. Therefore, in Janmabhoomi Trust case, 200% was allowed as an application. Later on came in, law was amended, keeping that decisions in mind. On the repayment of debt if you borrow money and applied it for acquisition of asset or any purposes, only on the repayment of a debt will be allowed as an application, not otherwise. And the repayment of debt, you have to make it within 5 years. Second condition, there should be no violation of cash expense beyond 10 or non-deduction of TDS. If you qualify all this, then it will be allowed. But this amendment which was made was little harsh because newly startup institutions or a school or a hospital, the moratorium period itself is 3 years. When you borrow and start paying, the amount that you start generating the income itself takes about 36 months. How can you repay within 60 months? But position of law is very clear. You have to repay in less than 5 years. This is same thing has been brought in section 341. Then deemed application. What is a deemed application? The deemed application means you are supposed to spend 85% of the 100 income. 15% by fiction of law, you are allowed to set aside. When you set aside 15%, it is called deemed application. Secondly, when you accumulate the income and you invest in the specified mode, that amount set aside for future spending is also termed as a deemed application under section 341. Then you have a capital gain. When the Amendment Act, when the new Act 2025 came in, initially, there was no reference to capital gain. Because in the repealed Act, there was a specific provision, section 11(1)(a), which says, in case of transfer of any capital asset, if the net consideration is acquiring of the other asset, then you qualify to claim as an exemption. So when there is a special fiction of law, it's section 11(1)(a), it need not be invoked to section 11(1)(a), call it as an income derived from the property held under trust. If there is a capital gain, here is a capital gain, here I have invested and all that. With regard to the investment, section 11(1)(a) talks about you have to acquire another asset. What is that another asset? Is it an immovable property or is it a property? What it is? Law was silent. Then interpretation of law started. Even if you hold it in the form of fixed deposit, it is an asset. Because here in section 11(1) there is no distinction between a long-term capital asset and short-term capital asset. What it contemplates is when there is a transfer of capital asset, you can invest in a new asset. There is no distinctions of short-term, long-term. As a result, even if you make a fixed deposit, then you are entitled, it is called as an asset, you are entitled for an exemption. Then the CBDT has issued a circular saying that you can create a fixed deposit, but at least a minimum tenure of 6 months is required to consider that as an asset. So when you transfer an asset out of the consideration, if you hold it in the fixed deposit, not less than 6 months, then entire investment made, you are entitled to claim an exemption under section 11(1)(a). Similarly, in section 341, subsection 9, they brought the similar provisions. It is sequel to what it contained in section 11(1)(a). So not to be treated as an application. Which are the circumstances? Not to be treated as an application is depreciation, because law was amended in the 1961 Act. Carry forward set off of excess of expenditure over income will not be allowed. Because earlier position, there are more than 20 judgments of the various High Court which supported the view, including Karnataka High Court. If there is an excess of application, that excess of application to be treated as an application for the subsequent years. this has been struck down, saying that if there is an excess of application, such excess will not be allowed to be carried forward and treated as application in subsequent year. Similarly, in 341(3), this will not be allowed as an application. Then depreciation also will not be allowed. This was amended in 2014. Either depreciation you can claim, or on acquiring of the asset you can claim as an application, but not the both. So even in section 341(3), depreciation will not be allowed. Suppose you don't claim on acquiring the asset, if you don't claim as an acquisition, then you are entitled to claim depreciation. So both cannot be claimed. Then any sum paid as on corpus donation to any other registered non-profit. This law was amended in 2018, saying that if the corpus donation received cannot be given as by way of corpus donation to any other institution. That is, inter-charity corpus donation has been restrained. The main reason why this law was amended was, suppose yours is a education institution, you get 10 crores. Out of this 10 crores, 5 crores you give as a corpus donation to other institutions. Then this 5 crores will be treated as an application for you. Whereas, in case of the other institution which received, they can still claim an exemptions of the 5 crores. If you go on claiming an exemptions without spending the money, what kind of charity it contributes? Therefore, to plug this, they brought it, inter-corporate corpus donation will not be allowed. So, if you do that, it will not qualify as an application under section 341(3). Then we come back to the accumulation of income. So what is an accumulation? Why accumulation of income arises? As I said, reiterated earlier, non-profit organizations have to spend a minimum benchmark of 85% of the gross receipt what they receive. If they do not spend 85%, then they have two choices. One is they can accumulate the income. For this, they have to follow prescribed procedure. In the earlier act, section 11(2) was prevailing, and rule 17AA of the IT rules 1962 was prevailing. For this, you have to file form number 10. And if you look at the form number 10, you have to specify objects for which you are accumulating, how much money that you are accumulating, for how many years are accumulating this money. But maximum accumulation for not more than 5 years. So then, while filing the form number 10, various issues came up. One of the major issue was how many objects we can specify in form number 10. Question came up whether it is a singular object or a plural object. These principles of issue came up because of the due respect to the wrong judgment of the Calcutta High Court. In J.K. Singhania Trust case. In J.K. Singhania Trust case, what had happened? They filed form number 10. While filing the form number 10, they have borrowed all the objects as contained in the deed of trust, numbering 29 objects. So while examining, he said, how can you bring all 29 objects in form number 10? You must bring only those objects which you could not complete in the course of the previous year. Only those objects has to be brought in for accumulation, not all objects. Then he denied the exemption. So this was challenged in the Calcutta High Court. And Calcutta High Court have upheld the views of the Commissioner of Income Tax. And even today, department cites this judgment. Then later on the trend set in was, Whether it is one object or 5 objects, what makes the difference? As long as they are the charitable objects as contained in the deed of trust, what makes the difference? So now there is no restriction to one object. You can bring any number of objects, but objects should be specific. In one of the cases, what had happened? They are mentioned in form number 10 for the objects of the trust. They did not specify what are the objects. The simplicitors, they said, for the objects of the trust. So AO has denied, CIT has denied, because there is no specification as to the object. You ought to have specified number 1, 2, 3, 4, which should be, no ambiguity should be there. In the absence of that, you are not entitled for an exemption. And this matter was challenged before the tribunal. In the tribunal, what I canvassed was, what is the meaning for the objects of the trust? See, now I am allowed to specify plural objects. Instead of specifying 1, 2, 3, 4, 10 objects, for simplicity I said, for the object of the trust. This is nothing but object as contained in the deed of trust. Then why should you deny an exemption? Wisdom prevailed, they have allowed. In one more case, they have mentioned for the application of the future objects of the trust. Forget the objects, future objects of the trust. Anyway, preponderance was on us to make some argument to say what are the future objects of the trust. It was so difficult. That time I said, don't just depend on form number 10. Form number 10 would have been filed by some of the juniors. Error would have happened. But you must go to the corroborative evidences. The corroborative evidences in the form of board resolution. As long as the board resolution specifies us, you must be contented and exemption to be granted. Here is a board resolution looked at. And based on that, exemptions was given. So now coming to the particular point, while submitting form number 10, you should be very specific. If not, you get into arena of litigations. Then another aspect of form number 10 was, I'm not sure what logic is that. At one point of time, form number 10 under section 11 to Red Bill Rule 17AA, you can file before the due date for filing the return of income. You can file it. So when the principal commissioner and CBDT member came, we have canvassed, look, why separate form number 10 should be specified? You bring in the return of income in ITR 7 itself one column. We will specify there, when they file the return of income, automatically it takes care of that. Why there should be specific form? But this was not taken seriously on that. On the other hand, what that could be filed before due date or filing of return of income, they brought that you have to file form number 10 2 months well in advance. Suppose your return of income due date is 31st of October, you have to file form number 10 by 31st of August. Your due date for audit is 30th September. Then what is the logic of this? Unless the accounts are complete, how do you file form number 10? Assuming that based on the unaudited results, I will form number 10. If you go to the filing of form number 10 after the audit, it erases the original form number 10 filed. It takes subsequent date when you file form number 10. The moment it takes form number 10 subsequent date, CPC will tax you because you have not complied on or before 31st of August. Again, you get into be trapped under the first litigation. Again, you have to challenge the CIT, go to the tribunal. But it was well said, before the completion of assessment, if you provide form number 10 or revise the form number 10, there is no number how many times you can revise. You can revise any number of times. But before the conclusion of an assessment, because of the judgment came from the Supreme Court in CIT versus Nagpur Hotel Owners Association case, reported in 247 ITR, very landmark judgment. So now coming back to this section 242, Circumstances when income, as I said, when you fall short of your application, you have to file form number 10. Then for that requirement is you have to file a statement. Statement is nothing but form number 10. And then you have to, before the due date for filing the return of income now, mandates that this form number 10 has to be filed. And the maximum period allowed is not exceeding 5 years. The other condition is when you accumulated the income under section 342, you have to keep the funds in the investment mode. Investment mode as specified earlier for section 11.5 and now you have to make it in section 350. The earlier investment mode and the present investment mode, there is slight changes that they have made. In the earlier investment mode, I will give you one live issue which came up. So one of the very senior chartered accountant called me in way back in 2022. He asked me, one of the devotee has given diamond crown to the goddesses. It should have been worth about 20 crores. He wanted to treat this as a corpus donation. He said, because there is a direction that we have to put this crown only to the goddesses, that to this particular goddesses, nothing else. Just because of this direction, he wanted to treat this as a corpus donation. So he wanted to take my views, whether his thinking is right or not. Then I said, he said, why you are treating this as a corpus? Because there is a direction to treat this for particular god. Then I asked him, law has been amended. Any corpus donation you receive, it should be in investment mode as specified in 11.5 of the earlier act. Will you find diamond as an investment mode? No. Diamond, silver, bullion, jewelry is nothing recognized as an investment mode. As a result, if you treat this as a corpus donation, I will assure you, you have to pay tax on this. Now, in case of temples, what happens? Suppose they accumulate the income. This accumulation of income for what purpose? Probably to buy the gold or the silver, but that was not recognized. Though some of the courts, Punjab and Haryana High Court said, for temples this should be exempted. They can invest in far above gold or silver. Now law has been, new law takes care of very well, saying that jewelry, silver is recognized as an investment mode under section 350. Then you have circumstances not treated as accumulation of income. When the circumstances when you cannot treat as accumulation income was when a non-profit organization, when they have accumulated the income, if you use this for paying to other non-profit organization, then you will not be qualified for accumulation. Earlier thinking was they cannot give as a corpus, but now any amount you pay to the other non-profit organization, you will be disqualified. You cannot give the accumulated income to any other non-profit organization. Secondly, the income not applied for the part which is so accumulated. See, now you have specified the object while filing the prescribed form for accumulation. If you do not spend the money or spend the money other than those objects, then you will disqualify. It will not be allowed as application. So, though you spend the money which falls within having a character of charitable purpose, but if you have not specified in this form, then you will be disqualified to claim as exemptions in that. Then the third is income accumulated not applied within the prescribed time. The prescribed time is 5 years. If you do not apply the income within 5 years under section 342 within part 3, you will be back to tax in that year. So these are the circumstances not treated as an accumulation for that. Then change in the objects. Suppose you have specified while accumulating the income, the board of trustees thought they would spend for 1, 2, 3 objects. Maybe after 2 years they think these objects are redundant. We have to change the objects. Can you do so? Answer is yes. Even in the earlier there was a provision. Similarly, they have brought it. Earlier section 11.3a was dealing with. In case of change in the object, you have to notify. You have to take the permission from the assessing officer saying that earlier I have applied in form number 10 for the object. Now board have resolved to apply the income for the following object. But these are the objects or charitable objects as contained in the deed of trust. Please allow us to apply the income. So this changes. If AO replies, well and good. Even if it doesn't reply, it tantamount to approval has been given. Similarly, in 342.5, if there is a change in the object equal to 11.3a, they have brought it over here. Then application to be made to the AO for change the purpose. Now, prescribed form they are bringing, because they say law says 342, 5 says, prescribed form they are bringing to file before the AO to take his permission for change in the objects. Then what is the position when non-profit organization is dissolved? You have accumulated the income. Say 10 crores you have accumulated the income, but you are dissolving this non-profit organization. Then what do you do with that? Whether you will be brought to tax. In such a circumstances, you can make an application before the AO in the prescribed manner that other non-profit organization you are transferring the money for making an application for the objects. So based on this, when the non-profit organization which accumulates, which goes into a dissolution, then you are permitted to apply the income for another trust or institution, and such transfer is deemed as an application in your hands for this purpose. Then we will come back to the commercial activities. I think the Income Tax Act 2025 has brought lucidity in thinking. They have very well conceptualized what commercial activity is that. And different limbs that they have brought in. Section 344, 345, 346, 3 limbs for the commercial activity. The 344 deals with when the business held under trust. That means when the property is held under trust, which includes the business. Section 344 deals with. This is the first limb. And the income earned out of this business is exempted. However, power is vested with the assessing officer to determine how much income can be attributed to the business. If there is your calculation and AO's calculation, there is a difference. That difference will be brought to tax as a specified income. If both matches, then you are exempted from the business generated of the business held under trust. What is the meaning of business held under trust? I will give you an example. Think for a while. Suppose I constituted a non-profit organization today by establishing a trust. My business, I will bring it over there in the deed of trust. Second situation is, in case of B, somebody gives, I started the trust, somebody gives as a voluntary contribution their business to my trust. Whether will you call that this is a business held under trust? Which one will you subscribe to the view? Business held under trust. Though Section 11 for earlier act and here, they don't talk about that. If you make a surgery looking at the real meaning conveyed by judicial pronouncement of all the cases, you will find only at the time of establishing or creating a trust, when the business is brought in, then only you can say it is a business held under trust, not subsequent act. As a result, when you start a trust, when you bring asset, business asset in the trust deed, settler ceases to be the owner, trust becomes the erstwhile owner of the business, then it is called business held under trust, which qualifies for exemption under Section 11(4) and under Section 344. This is the first limb. The second limb is commercial activity. Can a trust or institution engages in commercial activity? Answer is yes, you can, but to a limited extent. What are the limitations you have? Your trust or a non-profit organization can engage in a business, but it should be incidental to the attainment of main object. What is incidental? See, when I wrote a commentary on this income tax charitable case, most of our professional friends were not happy on this point. Because in 2014, when the first edition was published, most of the assessing officers who are reading the book, they used to quote what was translated in the book or recited. Business incidental, we have defined that there should be coherence between your activity and your object. And there should be a link between your activity and the main object. In other words, your activity should be a byproduct of the main object. Then only you qualify as a business incidental. Otherwise, it is purely business, not incidental. So most of them were not so happy with that. Because why did you write like this? I said, because this is the wisdom of my thinking, I wrote it. Then in 2022, Supreme Court judgment came in New Noble Education Society. You look there, what they said about business incidental. Similar to what we have recited has been brought there. To say business incidental, there should be coherence and nexus between your activity and main object. If there is a nexus, qualifies as business incidental. If there is no nexus, it is a business. For example, you run an educational institution. If you print and publish books, it is incidental. If you sell uniform, it is business incidental. If you provide a canteen to the children, students, business incidental. If you provide a logistics support, business incidental. Likewise, in case of hospital, pharmacy, business incidental. These are the examples given by the Supreme Court also. So therefore, to say business incidental, there must be cohesiveness. What you do, what your object. If it falls within this object, it is called business incidental. If it is a business incidental, even the earlier Act Section 11(4)(a) was governing provision. It prescribes two conditions. Firstly, it should be business incidental. Secondly, you have to maintain separate books of account. You cannot mix together. You have to keep charities one and business incidental separate book. If you maintain separate books of account, then the income or surplus you generate should flow back to charity, under that assumptions, you are entitled for an exemption. Then what happens to the religious institutions? What happens to the religious institutions? If the religious institutions sells the books, what it constitute? Constitute a business incidental or a business? The Mumbai High Court said, if the books propagating the philosophy published by the trusted institution, though for religious institutions, they are entitled to not to be treated as business or business incidental, because this is one of the ingredient of the religious cult. It should be allowed exemption. Then the third limb is commercial activity. See, earlier in section 215, which was defined the charitable purpose, proviso has been brought in. This proviso has been brought in by 2000, Finance Act 2008, which applied from 2019 assessment year. They brought in the definition of charitable purpose, if you engage in advancement of general public duty, if you carry any trade, business, commerce, or engages in service or rendering trade, business, commerce, then initially 10 lakhs exemptions they have allowed, subsequently enhanced to 25 lakhs. Then in 2016, law was amended, up to 20% blanket exemptions we allow. Beyond 20%, if you get that, then you are not entitled for exemption at all. Similarly, in 346, if you carry advancement of general public utility objects, in the pursuit of the objects, if you engage in trade, business, commerce, if it far exceeds 20%, first you have to maintain separate books of account. Then if it is less than 20%, you are entitled for an exemption. Because this has been provided, there are catene of Supreme Court decisions. Even there was a constitution bench of the Supreme Court in Art Surat Manufacturing Association, which held that just merely engage in business, don't deny an exemption. Examine what is my predominant object and what is my ancillary object. If you carry ancillary object, still you are entitled to claim an exemption. But in the case of Ahmedabad trade organizations, recently 2022, the judgment came. They said, these decisions no longer will apply now because the tenor of language in the proviso to section 215 is in the negative sense. As a result, predominant ancillary object question does not arise. Have you engaged in trade, business, commerce? Yes or no? If you say yes, did you cross beyond 20%? If yes, you are not entitled to. If it is less than 20%, you are entitled to claim an exemption. This is the same principles they brought in section 346 also. Then books of account. Now, in the earlier act, they have brought in, first of all, in the history of the Income Tax Act, they never prescribed the books of account for charitable or religious institutions. In fact, in our commentary book, we have raised this question also. If the books of accounts is not been prescribed, then how the auditor should consider for these purposes? Then the law was amended, books of account has been prescribed. Rule 17A has been brought in, which prescribes the books of account. And it prescribes not only books of account, records to be maintained for application, accumulation, investment, specified person transaction, everything. And in the 10B audit report, there is one column, whether they have maintained the proper books of account under rule so and so. If you say yes, it means all is well. That means all records is being maintained. Because there is no specification, they maintained A, they maintained B, they have not maintained all that. The moment you say yes, it presumes all records that they have maintained. And you have to retain these records for 10 years. for charitable institutions or non-profit organization, which is a privileged institution, they have to maintain for 10 years. So similarly, in section 347, books of account, audit, they have brought in return of filing of the income under section 243 1A, they brought, and mode of investment they have brought in. Now, if you do not maintain, what happens? Violations. Here also I think the government has done good exercise bringing simplicity to the violations. Because in the Repeal Act, the most prevalent confusion was prevailing. Section 13 talks about violations. Again, 13, you have 13.1a to 13.1d. Again, section 13.2a to section 13.2h. They are called deemed restricted user also. So any violations. So in section 13.2a to section 13.2h, when you give any undue benefit to the specified person, then to such extent will be treated as you have benefited to the specified person. In that context, various issues came up, and most of the time department always contest. Remuneration paid to the trustees, they always contest is unreasonable. What is reasonable, what is unreasonable is never discussed. The moment you pay remuneration, they say it is unreasonable. How did he come to conclusion this is unreasonable? Nobody knows. When a trustee works from morning till evening, should he not entitle for remuneration? If you employ another person, you pay remuneration. Why don't you pay remuneration to the trustee? So many cases it was contested. The one of the weakest point from the department side was they have to prove how I am unreasonable, why I am unreasonable, to what extent I am unreasonable. They have to compare of my age, my qualification, my experience, elsewhere paid. If they do not compare, they cannot say I am unreasonable. Very interesting case came up before the Karnataka High Court. In that case for dealing with remuneration, Kripaniji Education Trust, where it was contested, the remuneration paid, wonderful wordings made by the judge. They said, department cannot sit in the armchair and dictate what remuneration to be paid to the trustee. It is the prerogative of the board of trustees to decide what they have to pay. Department cannot decide unless he has comparable to prove that this is unreasonable. You cannot deny any exemptions and all that. So similarly here, they brought two different violations. One as a specified violation, then other violation. Section 351 deals with specified violation. What constitutes a specified violation? One, where any income of the registered non-profit organization has been applied other than for its object. So therefore, you should be considered to know the amount spent by the non-profit organization, what they have spent, why they have spent the money. Secondly, you must make a due analysis, which are the objects they spent the money. Even this is a responsibility of the auditors to check how much outflow, what for this outflow has happened. Ultimately, you have to capture for the object that they have applied this money. If it is not for the object, however the small amount, then comes under the specified violation. Secondly, it carries out any commercial act in contravention of the provision 344, 346. That means you have to maintain this separate books. First of all, you must have business incidental, that you must prove that both are coming under the purview of incidental. That test you have to prove. Second test is you have to maintain separate books of account. If you do not maintain separate books of account, then you are not qualified to claim an exemption. Issue came up. Suppose there is a pharmacy. It is a live case. Hospital is run by the charitable institutions, and in the premises of the hospital, they have a small pharmacy. They supply the medicines to the patients. Department has contested, you are supplying the medicine at maximum retail price, therefore, you are doing a business. If I say this is a business incidental, did you maintain separate books of account? In that case, they said, we have not maintained separate books of account. We maintain separate ledgers for buying of medicines, sale of medicine, nothing more than that. So on this pretext, Section 11(4)A has been invoked, brought to tax them. So in the course of the hearing before the tribunal, the argument was placed. What is the object of my trust? Medical relief. When I do a medical relief, without giving a medicine, can I give a relief to the patients? I cannot. So therefore, supplying medicine is an integral to the object of my medical relief. It is not a business. It is neither business nor business incidental. So the time that Corona was also there, supplying, then I gave an example. Just merely I supply oxygen to the patient. You mean I'm doing a business? If I had not supplied, patients would have dead and gone. Therefore, in that context, this is an integral to the system of the object of medical relief, neither fall as a business or business relief. The Honorable Tribunal of the Bangalore bench said, yes, it is an integral part of that, not necessary to maintain separate books of account. But after the judgment of the new Noble Education Society, it is slightly different. You have to maintain separate books of account. Then, second is it carries on any commercial activity, I have said, where it has applied any part of its total income for private religious purposes. So private religious purpose, if you apply, then there is a violation. Then where a registered non-profit organization created, established after the commencement of the act, has applied any part of the income for benefit of any particular religious community, caste, other than scheduled caste, disqualifies as violations. Where any activity be carried out by the registered non-profit is not genuine and not being carried out in accordance with any of the conditions subject to which registration has been granted. Now, please look at 10AC or 10AD, what you got from the Commissioner of Income Tax when they grant the registration. They would have put 15 conditions. So not only you have to apply, you have to construe with the compliance of all the conditions what they have mentioned. In earlier, when the new regime of registration came in 2021, when they have granted the provisional approval even for 5 years, they have put the condition, any sale or transfer of immovable property, you have to obtain the prior permission from the Commissioner of Income Tax. This was the condition. We challenged, we wrote to the CBDT, why should we go to the Commissioner of Income Tax for sale of our property? It is a prerogative of the Board of Trustees. Board of Trustees has the power to decide what they have to do. Why should we go to the Commissioner of Income Tax? Because we don't have any other law here. For example, you have Telangana, you have Telangana Charity Act. You have Mumbai Charity Act. You have Gujarat Charity Act. Where in the Gujarat Charities Act, there is a precondition, they have to obtain permission from the Commissioner of Income Tax. But whereas in Karnataka, we don't have any other act binding on me. Why should we go to him? Then after the deliberations and all that, 11/2022 circular came in saying that they have deleted this portion, obtaining prior permission from the Commissioner of Income Tax for sale or transfer of the immovable property. But rest of the condition, what they have mentioned, you have to comply with. If not, it falls under the violation. Then the registration non-profit organization has not been complied with the requirement of any other law. This is the most dangerous one. because they have not specified which law. We presume because in the specified violation they have in the earlier 12AB explanation 4, they said for attainment of the object, those enactment if you have not complied, when it reaches the finality, then on the basis of that he can refuse to grant the registration or cancel the registration. But the wordings are not happily made on this regard. Then, application referred to 332(1) contain any false or incorrect information. Suppose for seeking registration you make an application. If the information what you have furnished appears to be a false or incorrect, then it falls as this violation under section 351 with 353. So what is the consequence? Suppose you are violated. What are the consequences? This is the violation 341. The other violations are contained. If you fail to maintain books of account under 347 is other violation. Again, if you fail to get books of accounts audited, 348 is a violation. Again, fail to furnish its return of income under section 349 is a other violation. If you are carrying out advancement of general public duty or in contravention of the provisions of 346, where you are not maintained the books of account and all separate books, it is another violation. Then, okay, I made a violation. What is the consequences of this violation? The consequences of the violation, now they have wrapped it in a simple manner, but punishments are deterrent. If you look to the wordings, what they said, in case of violation, there are three circumstances. One is, regular income has reduced, the expenditure shall be chargeable to tax 334. Then expenditure referred to in subsequent shall be expenditure incurred in India other than all this. Such expenditure shall be incurred in India. All these things will cumulatively consider. Then what happens is, I will come back, powers is given to the commissioner. So now the power, there are three types of the powers has been given. One is the principal commissioner has noticed occurrence of one or more specified violation during any tax year. That means other violations will not be considered for this purpose. Only specified violations. On those specified violations, three options have been given. The principal commissioner on suo motu, he can notice there is an occurrence. Secondly, the assessing officer in the course of the scrutiny, when you file the return of income, he will find, oh, here is a violation. Then he will not pass the order. He will bring it to the notice of the Commissioner of Income Tax. Then the Commissioner of Income Tax will issue a notice in the earlier second proviso to section 142, and based on which you have to demonstrate whether there is a violations or not before the Commissioner of Income Tax. In any case, after giving an opportunity of hearing, then he has to come to the conclusion, is there any violation or no violation? If no violation, then reject the application made by the assessing officer and let it continue. If there is a violation, they can cancel the registration. Not only to tax them, to cancel the registration. This is the provision. And the third circumstances is a risk management. Though law was brought in 3 years ago, still they have not defined what is the risk management. But sometimes we receive a notice from the assessing officer based on the risk analysis. But how did they arrive this risk analysis? We are not aware of that. So these are the powers enshrined with the commissioner in case of specified violations. Now, tax on accreted income. This is similar to what we had earlier. So one of the basic philosophy of taxing on the unaccredited income was, you have enjoyed the income. You are exempted. Therefore, when there is a change in form, when the tax exempt zone, when you come as a taxing zone, what you have enjoyed the tax exemption should be brought to tax. Therefore, asset will be valued at the market value on the date of cancellation of registration, etc. Minus of the liabilities will be brought to tax as 30%. After the hue and cry, law was further amended. Before obtaining the registration and claiming of registration, if you have made in any asset, that will not be considered for accredited taxes. So there is a table which is integral part of section 352, which brings out the areas under what circumstances that this will be treated as accredited income. And they have brought it in a very simple manner. It is understandable. So now I think I will just leave open the floor for any questions that you have, so that to the best of knowledge I can address it, or I may be enriched out of these questions also.
At the beginning, you told there is the difference between partial and wholly charitable organization. Now, for the organization which was partial before this amendment, what will happen for that? That is one. Then, for the anonymous donation,
Go ahead.
for anonymous donation, most of the religious organization, they have anonymous donation. How they will rate for that?
I will answer. See, with regard to your first question, erstwhile you have both the object and you are enjoying the exemption. In the new Income Tax Act 2025, nothing will be disturbed. It will continue to be. This is the first part of your question. Insofar as the second question, so I may be permitted to sit. As far as the second question is concerned, anonymous donation, for religious institution, provision of anonymous donation will not apply. They're completely exempted. Two categories which are exempted. One is the religious institutions. Secondly, charitable and religious institution outside the purview of anonymous donation. But why anonymous donation was brought in? Since I gone into the deep of the analysis for the commentary book, I will just share with you. Way back in 1971, the government constituted a direct tax inquiry committee. It was also called as a Vanchu committee, headed by the Chief Justice of the Supreme Court, called Vanchu. The area for them inquiry was to find out how the parallel black money can be mitigated in the country, because black money prevailing was at par with the economy. How to mitigate this black money? And this Vanchu committee went round. They submitted the report in 1972 November. They found most of the black money was prevailing in charitable or religious trusts only. Because there is a cash entry, huge amount. When we ask from whom did you receive, nobody knows. Therefore, they recommended black money prevalence in case of charitable religious institutions. Therefore, they recommended to tax at the rate of 65% in 1972. This matter went up to the Lok Sabha. They discussed, then put back this to the select committee. Select committee sat for some time. Then they came back and said, anyway, charitable institutions, they have to spend the money of 75% at time. Income tax commissioners will look into these matters. As long as they spend the money, why should we worry so much about it? They put back to the back burner. When the Union Minister, Mr. Chidambaram, he resurfaced it again and brought anonymous donation in 2006. Recommended, based on this Direct Taxation Inquiry Committee, consider this as anonymous donation. If the identity of the donor is not established, then they have to be taxed separately. And however, they have spared religious
Reports
institutions.
of 10B, BB and audit reports in last 1 or 2 years. By oversight, if wrong audit report is been used and filed, whether or there has been delayed in filing audit report, condonation of this delay, online facility is not available, physically if we have done to commissioner and there is no response. So just by filing that application or request will be a strong point, or there is a issue there, or how to go about it?
Thank you for the good question that you brought us. Initially, when this 10B, 10BB came in, either confusion or some mistake was happening. Instead of 10BB, you would have filed 10B. 10B is a more upgraded audit report than 10BB. Department must be more happy with 10B. However, if 10B were to be filed, if you file 10BB, much of the data has not been captured. There the problem comes in. However, if you have filed a condonation, because there is no online platform for that, if you have made a physical application before the commissioner, there is a circular which allows you to approach the commissioner for condonation of delay. Suppose he has not condoned, kept quiet. Then, if there is any liability has been arising out of this, you challenge before the tribunal. 99% you will get the relief. Because audit and uploading the audit report, both are two different functions. There is a mandate under section 12A1B for audit. As long as you have done the audit, that is a mandatory requirement, you have completed. Uploading the audit report is only a directory in nature. Overwhelming majority of the cases in the country and in the Bangalore Tribunal and Karnataka High Court have said this is only directory in nature. Therefore, if you have filed it subsequently, still you are entitled for an exemption.
What is the logic behind making corpus donations into 3 parts? One is before 1/4/2021 and after 1/4/2021. Because in some of the old cases, we are unable to make any bifurcation between the corpus donations, one. And second one is, while reconciling the corpus donations, we have to give that reconciliation under section 11.5 or in the specified mode. We are unable to give that because in one of the cases, the CPC has denied the benefit of 11.5 and they have brought the corpus donation to tax, since there is a mismatch between the reconciliation. So how to address these issues?
See, you should be thankful, at least they said prior to 1/4/21 this law will not apply. Because the logic is that the corpus donation, you have to maintain the specific records, specifically maintained for corpus. This is the law. If you make any investment, say for example 1 crore you got corpus, you have to hold it in an investment to 1 crore to match with that. if you do not match, still you can argue that yes, because you have maintained only one bank account, the money comes in, money goes as a result, it can blur. But as long as you can prove that corpus fund is intact in the prescribed mode, you can be exonerated. See, prior to 2021, there was no binding force that corpus fund should be kept in specified mode. There was no. It could have been used even for furtherance of the activities of the trust also. Therefore, the law was amended with an exception. Up to 1/4/21, whatever the corpus, you need not prove in the investment mode. Subsequent act, you have to prove this is investment mode. So now, in fact, in my commentary book, I have commented, when you are presenting the accounts, make it corpus donation up to 1/4/21, this is the balance. Then subsequent. This subsequent you match with your fixed deposit at the bank account. Suppose you mix all together, you will get into problem. That's the reason in ITR 7, there's a specific requirement prior to 1/4/21, what was your corpus. I don't think there is any difficulty to extract this figure, right? You have any problem? There's no problem. You have accounts for last 3 years. Take out what was the opening balance in 1/4/21, put it there. I don't think it will be disturbed on that. Only subsequent act.
Sir, the trust is an engineering college which is also providing training on AI tools for CEOs and CFOs, the big companies. Now the question is here whether the training provided to CEO and CFOs will be an incidental to the objects, or it is like advancement of any other general public utility, or it is a commercial activity. So like how do you define the incidental? So exactly.
What do you subscribe? Let me hear from you.
Sir, on the question side, on the, what do you say?
No, answer side. See, now you pose the question. What is your views?
So since the it is an engineering college basically. It is in the 215 covers the education part also.
Correct.
The definition. So the training which has been provided to CEOs and CFOs will be coming under the definition of education, but as income tax doesn't provide the definition of education. So like we will treat it as an incidental, or we will go it as a commercial activity.
No, you have rightly answered. Yours is an educational institution.
Yes, sir.
Education, you are imparting the education. When you impart the education, it falls within the limb of education under the definition of charitable purpose, right? So even the CEOs and all that, are you imparting education? So how do you say it is an imparting education? One more which I represented before the tribunal way back in 2007. In fact, Honorable Tribunal asked me, define what is education. I have answered simply. On one side there are teachers, the other side there is a recipient called students. The bridge which happens between the teacher and the student is called education. Because the word education as used in section 215, it is in the broad sense, not a restrictive sense. Though there is a judgment of the Supreme Court which says normal schooling is required. But whereas in section 1023, it is very specific. Education existing for educational purposes, not for the purposes of profit. But here the education used in the broad sense. Thereby, you are imparting educations to the CEO, maybe in a structured or an unstructured manner, what it for the engineering college, but definitely it is an education, not a business incident. That's
Thank you,
my
sir.
view.
Oh, thank you, sir.
Good afternoon, sir. This is pertaining to the religious trusts. See, in many religious trusts, there are cash expenses. how do we exactly deal with it in the audit reports?
It's very simple.
Because-
Advise them to not to make cash expense.
So that
It's
is, I mean,
simple.
you know
See,
it is not
because
possible.
law is changing. They have to. I have plenty of religious institutions. They have to trim down to the requirement of the law.
See,
For example,
Ah.
yeah, you give example, I will tell you.
Sir, say there is a temple trust or I think for this annual whatever they call this Brahmotsav, whatever it is, flowers, where we will go, it is a huge expenditure if we really know about it. I mean, it's real, so
see,
it's a
today-
huge thing for us also to deal with.
No, it's very simple. Now, digitization is across India. Even small vendor on the footpath is on the digital mode today. See, we can't subscribe the same old theory because of religious institution. They are exonerated from strict following of the law. Now they have to follow. So now, whether you are in a Brahmotsava or whatever it is, payment they can make subject to TDS, what is the problem? Only the management should be trained, should be educated in compliance with the requirement of the law. I have faced another problem. You know, in Aradhana time, certain section of the people were allowed to be sit first to take the Tirtha Prasada of this temple. On this mutt, they pay them because they are in the primary group. They pay them 50,000 rupees per person. And they pay cash. Why can't they transfer bank account? What is the problem? So because in the course of the scrutiny, they said, why are you paying all cash to them?
Exactly.
Yeah, definitely. Even I subscribe. Why they are giving cash? Of course, cash is such a way, in the country, Lakshmi is so powerful. Even if you make digital, by seeing Lakshmi always, mind goes well with it. But they have to comply with the law. There's no excuse on that. They have to do that. If deduction to be made tedious, they have to do that. Now, law prescribes beyond this, don't make cash payment. They have to comply. No excuse on that.
Because this is
Say,
typical
only
in
thing
all-
is the governance and management should be properly educated.
So, how do we deal with this in 10 BB?
No,
or
you
10?
have to qualify, no. Because there is a column. If it is far exceeds 40A, 10,000, they have to pay tax on that. And even, but there is a flaw in the law and the ITR. 40A, 1A, where the TDS deducted which has not been deducted, if you treat it as a profit and gain business, only 30% to be disallowed. Disallowance will come, but if you look at the ITR return, it will tax you. Extraordinarily, law was taken in ITR 7. See, most of the cases, what happened, if there is no deduction of TDS, they used to subtract that expenses from the application itself.
Correct.
Correct?
Correct.
But actually 30% can be done. But when you lost already in expense, again on that amount you have to pay tax. That means twice you are punished. I have already brought to the notice of the principal CIT to correct it in the next ITR 7.
Okay. And this, whenever this AOP is there, it is not that maximum marginal rate only it is taking. It is not giving the benefit of the slab tax in many cases.
See, now on violation you are talking about?
Yes, sir.
Only on violation MMR will apply.
Okay, only on that part, isn't it?
Yes, only violation under section 13(1)
and
AC, section 13(2)A to section 13(2)H,
That-
MMR will apply. Rest of them, it will be in par with what individual pay taxes.
Correct, but we are not getting that in all the ITRs uniformly. I have seen 3 or 4 cases where in 1 or 2 cases it allows, in other cases I don't know if other people have done or maybe I have done a mistake. I just wanted to clarify.
I'm not sure what you are saying, but this is the position of the law. In fact, when we file the return of income, AOP on this, MMR will apply. Probably that selection what you did
Okay.
could make the difference, you check once.
Hello, sir. Good afternoon.
Good afternoon. Yes.
Sir, yeah, I have two questions.
Yeah.
One is there's a trust which has an object exactly as per 215, except yoga in it. So they run a school, and the surplus of the school is used to build an hospital. So the schools are CBSE and ICSE school. So as per CBSE and ICSE norms, the surplus should be used on the object. That should be on the school itself. But here the trust is doing an hospital on that. So what is the impact on 12A?
The hospital medical relief is one of the object.
Yeah, it is an object. As per income tax, it is an object. But I'm talking about CBS and ICSE point of view.
No, let's not bother about CBS and all. Under the act it is allowed. Because here is an application.
No, but is this violating a CBSE law, right?
No, maybe, but we are only concerned with the income tax law. You know, as long as you have an object which you apply the income, it's for the purpose.
But they may lose CBSE registration then.
See, you have provided the constitution to them at the time of registration.
Yes.
Correct? They have a cognizance of the knowledge of this. Did they restrict you?
No.
Then,
Okay.
see, when I give my trust deed, they read the trust deed. Based on the reading of the trust deed, they grant me the permission. How can they go back of that? So
Okay.
therefore, educate them to put arguments like this.
Okay. Second one, sir, the last one. They also do a preservation of a monument. So they have a, monument something of Gandhi Memorial outside the city, and the extra space towards the memorial, they give it to one of the beverages center. Like example, like assume as CCD put up a center there and sells a coffee. So is it a commercial activity on the object, or is this going to be a business?
What do you earn out of that?
Sorry, sir?
What do you earn out of that?
So the agreement is like on a 10% on a sales. So whatever the sales made by the beverages, it looks commercial. The agreement is a commercial in nature. 10% on whatever the sales made by the coffee shop, there the revenue is made to them, and they have a GST also.
Who are all the users of this coffee shop?
It's a general public. People who go on the way, hit the highway, and who come to visit the museum, takes the coffee shop. It's
Will you prove this as an incidental? Can you prove?
exact to the object, no.
It is amounting. Suppose you are providing to the students, you are providing to this and all that, it falls under the incidental. Public can come, I will run the restaurant, right? In what way it makes the difference? I set up a restaurant. People will come and eat. For example, the ISKCON has a restaurant, right?
So
But who will come in the restaurant?
general public.
If you have a data, of course, your people and outsiders, different from the degree, you can make an argument. But it looks to be you are running a business.
So even the schools and institutions have a bank inside, and lending out to them also business.
No, letting it out is whether a business or not is a different matter.
Suppose Christ has a South Indian bank
Because
inside.
under the new Act of 2025, does not amount to a business letting of the property.
Letting of property is not a business. Thank you.
Hope that.
Yeah, good afternoon, sir. Sir, just wanted to further to the last question. In case the audit,
Last but one is waiting here for last 10 minutes.
yes. So, in case the audit report, that criteria of uploading 1 month prior to the due date, if it is not uploaded 1 month prior and it is uploaded later, there also similar condonation will help, or is there issue?
See, condonation will help in all the cases. There is a circular, but you have to justify why did you not upload within the specified due date. You have to prove what prevented you from uploading. Justify the reasons. I don't think ordinarily they will accept.
Regarding this cash payments, one of the trust what they are doing,
Why volume? Yes, please, go ahead.
they are transferring a specific amount to the person who is going for the purchase by online transfer. In turn, he makes the payments for these flowers, vendors, and all those things by cash. Whether it amounts to cash payments or it is online payments.
Who is the specified person? Trustee?
A trustee or any management member or committee member, he takes money to his account by way of a transfer, and then in turn he will spend for purchase of these flowers.
Now, how do you satisfy the genuineness of this transaction? First of all, transferring money trustee itself should be barred.
No, that is for the purchase, like for the reimbursement or whatever it is.
Yes, firstly, the transferring money bringing specified person is not correct. Assuming that you have brought them, behind the scene what he has spent, do you have a documentary evidence?
Yeah, he is giving the vouchers, he is giving the supporting documents and all those
But
things.
he is spending by way of cash is
Cash,
also...
cash. Because he goes to the
That
market.
means- that means impliedly, indirectly, you are encouraging cash.
But from the trust, it has gone to by online transfer
But
to
he's a
that particular
specified person.
committee member.
Suppose you would have transferred to A, who is a stranger, would have made the difference. He is a specified person, he is a trustee. Even it is more vulnerable. I will tell you one case, very landmark judgment, reported in 259 ITR, called Diamond Boss case. It is from the Delhi. What had happened? It is a Section 25 company. The founder, director of the company, took 50 lakhs from this Diamond Boss company. So then 1 year over, second year over, he never returned. In the third year of the scrutiny assessment, Eva was bent upon him to disclose who is this person, why did you make the payment? Then initially they were making a evasive reply and all that. Finally, he was bent on that. Finally, they said, we have given this money to the director, purport to buy a property or to take a lease on property. Then he is asked, more than 36 months over, what has he done? If he has not bought the property, he should have returned it. Why has he not returned the money? Did you charge the interest on that? No. Then they took up very seriously. Then they have forfeited the exemption. Then went up to the Supreme Court. Supreme Court, they asked, yours is a charitable institution, you should be more transparent. How can you take money and not give the money back to them? Therefore, they called this as a sham transaction. Exemptions were forfeited. So similarly, if the trustee himself takes the money and goes on making cash payment, first of all, genuineness of the transaction is doubtful. Secondly, the specified person should not get involved in this matter.
If they give it to third person,
Third person subject to TDS, you can substantiate, no. Because here no TDS. Simply trustee is taking money. Suppose the third person you hire, you give him 1 crore subject to TDS. To that extent, genuineness is there.
and he will make the cash payments to the.
That is up to him, why you worry?
Okay.
He is a third person. But don't take my advice on that. Okay. Simply out of context, I'm telling you, it's not the law. Okay.
Suresh, 1 minute.
Yes.
See, is that 85% and gross income and net income is crystallized?
Absolutely.
And what does
Absolutely. See, recently, last January, one of the cases, because most of the time, 85%, 15% stems from the judgment of the Supreme Court in 248 it was reported. But in 2012 and 13, the additional commissioner in Bangalore, he has twisted the case. He said in that case only donation was received, not with regard to activity. When there is an activity, it is called a business. You have to take only net surplus, this on the gross you are not entitled for and all that. In fact, he called me once. Then I explained him, sir, if educational institution hospital to give only a net surplus, then you have to rewrite the law. As long as the law recognizes you are a charitable institution, education and medical relief, you have to compute on the gross income, not on the net income. Secondly, if I engage in business, only plowback to charity should be considered, that part only. Then this are all that almost crystallized, but department again it was a program committee case of 248 ITR. Recently in that I have added one more Supreme Court case, much earlier than the 248 ITR. That is called Dr. 195 ITR, it was reported. I have recited and I have submitted before the tribunal. They have categorically mentioned in their tribunal order. One of the most fantastic judgment, they gave an illustrative example. How to compute 75-25 then. So therefore now, as long as you engage in charitable activity, 85-15% goes to the gross, not onto the net.
Including donations.
Including donations. Except corpus donation, again, you will be 11, 1D will apply, you will be subtracting. If you are engaged in any business incidental, net surplus to be considered for this purpose. This law is crystallized now.
What about new law? What does it say?
Yeah, new law is very crystal clear because they take what is regular income. Regular income includes voluntary contribution. See, this section, this new act is so specific. They said activities of the institution should be considered. Regardless. So now 344, 345, 346, you have to distinction. Their net income, because you are maintaining a separate books of account, that net income alone will come for purposes of distinguishing 85% and 15%. Law is very clear.
This 85%, any relaxation is be given. Project is taken, the completion was not done because of so many factors. Whether any court cases are there.
Beyond 5 years, what you are talking?
Yes.
Only
No,
that
project is taken up, but not could complete.
there is a wonderful judgment of the Madras High Court. Supervening impossibility. If you have my book, I have quoted there. Supervening impossibility is one of the headline abroad. In that circumstances, even court will extend on suo motu. You can do that. Okay? So I thank all of you for such a wonderful patience hearing and educated me in all sides. Thank you all, please.
A very good afternoon, members. It is my privilege and honor to deliver the vote of thanks for today's insightful session on non-profit organization under the new Income Tax Act 2025. We extend our heartfelt gratitude to our esteemed speaker, Dr. C.A.N. Suresh sir, for sharing his deep knowledge and expertise. We also thank the participants for their enthusiastic involvement and for making the interactive discussion meaningful and enriching. On behalf of member present here and all the managing committee member of Bangalore branch, now I request Chairman C.A. Manjunath M. Hallur to kindly hand over a memento to the session speaker as a request and gratitude. Thank you, Chairman sir.